Lesson 10, Learn Market Profile, Part 2. Okay, so let's do a quick little recap of what we were talking about. Okay, so market profiles were 70% of all volume has traded during that time period. Okay, and instead of the volume being vertical, it's horizontal. There's two different volume profiles. There's volume profile, which is price only. Okay, how many contracts have traded, and then you have what's called TPO volume profile, time price opportunity. Okay, what that stands for is it's how many contracts have traded, price, okay, but also how much time his volume traded or spent at that level. Okay, volume profile tries to trade in the perfect bell-shaped curve. Okay, so what that means is if you look up here, right, we actually have a nice bell-shaped curve right here where it tapers off at one end, tapers off the other, and then you have the most of the volume trading right in the middle. This is what's called a very balanced day right here, right? So what happens is price will fall, it'll rally to another extreme, and then it'll usually trade within a range for the rest of the day, okay, to make that perfect bell-shaped curve. But it's what price is really telling us when it does it is it's accepting prices at the current level. Okay, so right here we could see for a while price actually balanced for a while, right? It just kind of found the accepted price, but it opened, it ran up here, okay? And then it tried to find acceptance, couldn't, and now it has actually a second level, okay, where price actually found acceptance. You could, if we look right here, right, price found acceptance here, then it fell, right, and then it found acceptance here. This is also what you could call a double distribution day, okay? Right here, price at the end of today was trying to find acceptance at higher prices, but time ran out, meaning the market closed. But if we look, a majority, the 70% of price actually traded lower than where price closed. So that's kind of letting us know, hey, price kind of got ahead of itself, okay, quicker than the value of the price could catch up, right? Kind of think of it as the longs are getting overly aggressive, okay? So, or they're long in the hole, right? So they actually might be wrong on the trade because price will actually or potentially could fall back down to look for the fairest price, or price can actually stay up here. All this is right here is during that time frame, okay, of what's on the chart. Okay, this is showing us what the volume. So, and these are high volume nodes and low volume nodes, right? Low volume node, high volume node, high volume node, low volume, high volume, right? They act as support and resistance levels as price moves up or down. Okay, so let's take a look at another chart. Let's take a look at this chart. This is a 15 minute, 20-day chart. Okay, so this is showing me price. Every bar represents 15 minutes over the past 20 days of the regular trading session only. That's what I look at on this chart. Okay, different charts I'll look at different things. Okay, so but normally with market profile I'll usually look at regular trading hours only. Okay, it's a lot cleaner, works a lot better, I believe, for myself. Okay, so we could see, okay, price, the point of control is way up here. Okay, this yellow line right here is the value area high, and then this yellow line right here is value area low. So what this is telling us is 70% of all volume over the last 20 days has traded within this range. Okay, and look at how much price actually the point of control is, right? Price is way out here, okay, while the volume controls, or sorry, the largest volume is here and here, right? So what's going to happen? Price is either going to rally all the way back up here potentially, or price might stay at these levels, okay? Price actually might stay within this range and either build this out or this price level out, okay, to bring down the point of control. If that happens, then what the market on the bigger picture is telling us is they're accepting prices at these lower levels. Okay, for a while we were way up here at 2100. Okay, we've been up there for all year. We dropped. Now, as we could see, price is actually trading within a range, right? If we kind of look at it on the bigger pictures, well, price might just stay down here over the next couple weeks and build out these volume profiles larger than this and then bring down the point of control here. Or let time pass and then that point of control disappears because the days, remember, the charts are based off the past 20 days, right? So it's not static in that way to where within 5 or 10 days this could all disappear. This price actually comes all the way down here, this point of control, okay, to this level, and then we might have a value area high here, value area low, in your point of control here, right, versus it being way up here, okay? So these are things, but until then, I'm going to use these price levels, okay, as support and resistance levels, okay? And if I actually will grab our price level, okay, so we have a high volume node here, we have a high volume node here, and right here we have a high volume node, which was the high of day, right? So as we could kind of zoom in, all we did was put a price level at the highest volume, and that's where price kind of went to, right? So we're going to find resistance levels up at these levels, right? So now if price falls, do you think we'd find support at this 1922 level? Probably, right? But if you also look, we have low volume nodes within these levels, right? So we actually have a low volume node here. We have a low volume node here, right? We have a low volume node here. We have one here, okay? Remember, price will either reject it or maybe trade sideways to build out and try and create that perfect bell-shaped curve, right? Price could easily just start to trade and fill all this up, okay? And we just kind of trade within a range of this over the next couple days, right? And then we actually start to build that bell-shaped curve. Remember that the market's job is to find the fairest price, right? So that's why I said earlier in the psychology lessons, price isn't against you, okay? It doesn't know who you are. It doesn't even see your order, okay? Because you're such a small guy compared to everybody else. All price is doing is trying to find the fairest price, okay? Where buyers and sellers could agree upon a price. And that's what high volume nodes are, okay? That's where the buyers and sellers are saying, hey, we both accept this price. That's in the basic, simplest form, okay? So now now we kind of have levels, right? Now these guys right here are Fibonacci's, right, during those times. So look at where price stalled today. We went right to the 50% from this high to here over the last 20 days, and we stalled at the 50%. What I like to do is I like to look, okay, hey, do a couple things line up? Well, yeah, look at this high volume node, right? Because you have low, low, and then the highest volume between all this right here, right? Well, that actually lines up exactly at the 61% retracement. So I'm going to look for a potential short if price rallies up to that level. Okay, now let's look at another chart. Okay, this is another volume profile. This is a 3,200 tick profile, okay, over the last 5 days. It gives me a different picture, okay? This chart's going to give me a picture of swing highs, swing lows, different things that I could see a lot cleaner. They're not candlesticks, they're bar, okay? But look at these high volume nodes here, right, during the day. Or the white bars or volume profile, right? Point of control, value area high, value area low. Well, look at what price did, right? Right at value area high, okay, price actually found support here. Same with the value area low, right? So here, price actually found support down at these value area lows. So this chart's kind of giving me a little different picture. Again, play around with these charts. They're all going to work a little different, okay? But this is actually a volume profile chart, not price and time, okay? This is strictly volume profile. And as you could see, we came right to the low volume node of 1969 and rejected from it because it fell. Okay, so price will either reject or accept at those levels. One more thing, okay, and this is going to be more of a trade idea, okay, of what the way I love to trade these. These are what's called naked volume points of control. Okay, so right here, as you could see, tomorrow, this is going to become a naked VPOC, okay? Meaning that price has not touched it during the regular session, right? Because today was the day. So if price pulls back, I'm going to look to be a buyer. Right here, we have another one in 1932, right? This naked volume point of control. Price gapped higher, so we haven't touched it. So next time price comes back down to it, we're going to be looking for price to actually come down. We actually have a couple stacking up, right? Naked virgin points of control or volume points of control, however you want to call it. But we actually have 3 of them stacked up, right? Look at this. This price closed, we gap lower, right? So this was a virgin point of control, naked virgin point of control. Price rallies right to it, rejects it, and fails, right? So right here, we have a volume point of control, right? That hasn't been touched until this day, right? So we gap down, we rally, and we pretty much come close enough with a point back on last Friday, okay? Same here. We actually gapped higher this day. We pull right back to it. So what I do is I use these naked virgin points of control as support and resistance levels. So I know on the downside over the next couple of days, I'm going to be looking for these levels to be a buyer, right? 1949, I'll be a buyer. They're also high volume nodes, right? That's the most accepted price. So that's the edge that we have for high probability trades, okay? If we come down 1932, I'll look to be a buyer. If we come 1921.50, I'll look to be a buyer around those levels because I know price hasn't tested those levels and what price, they act as a magnet where price wants to come back and test them. Okay, now it doesn't always work, but it might take a couple weeks, couple months, but on the way back down or on the way back up, okay, price will want to test them, and those are great high probability support and resistant levels. So that's it for lesson 10 for learn how to trade using market profile. I suggest download these charts, play around with them and watch how price kind of reacts at these levels I told you. Coming up next is lesson number 11.